Okay, so welcome back to this second part of this weekend video review. Today is April the 3rd, 2018. It's almost 12 p.m. EST time in Toronto. And this video is part of the FibStalker and Asian Trading Service. I'm Giuseppe Basile, also known as the FibStalker. Before we proceed, I'd like to ask you to please read and review the usual disclaimer here. Post the videos are not done that yet. Thank you very much. All right, so let's continue here. We reviewed the futures and the majors, plus the minors, the minor New Zealand dollar, US dollar, and US dollar Singapore dollar. So let's start again. This time with the main other markets: Australian dollar, Canadian dollar, very weak here, and moving down into that 50% here. You remember that after that 50% has hit the first target, you know, the market has was challenging that 50%, but that 50% is not holding, as you can see here. Okay, so the meaning of this is that this is a big, huge range, and this market is now continuing down into the bottom of the range, and that would be 96.41. That's what I am gonna put on this chart for us to remember. Okay, that's recent development here. This market just you know, strongly selling off on Canadian dollar strength. On the other hand, of course, the Canadian dollar, Japanese yen, it's seeing a reaction higher here, and that's happening on top of a level that we knew since a few months. In fact, if you go back to the reviews, you will see that I've been talking about this, a retest of this level now since many months last year, and the reason is that this market never came into that first target, and on the other hand, bears came into the game here and twice pushed this price lower. So we knew you know, the 81.92, 82 level was highly probable here. Okay, now is this enough to reverse this market? Because if not, then you know, I'd like to start looking at some short level. The first one is coming at 83.67, and it's probably that we're going to see some profit taking around that level. Now, this market has been very technical here, and in fact, it offered an opportunity at the beginning of the week here. I've not been trading a lot. I only took a couple of trades because of the Easter long weekend, but the opportunity was there, and you know, more opportunity will come, so I'm not worried about that. 83.36 is the first target. Market very close. In fact, it has already been tested. Possibly this market could continue higher to encounter that price, to encounter that 83.67, and then we could see some profit taking around that level if that happens, right? So let me put the level here, and this level here, it's a very large notable. It's also an extension, aggressive extension short here. So if this level comes into play, what we could see in this market is a profit taking and price getting into the next 50% long. Okay, so I'm talking about a move between 83.67 to 82.64, so 100 pips potential correction here before a test of the continuation higher is gonna come. One of the longs I had, and I closed with a small profits, was in here. In the Euro Australian dollar, but this market, after I saw he traded the 50% short, then you know, I removed the longs, and this market, as you can see here, is now hitting that first target. Has hit that already, and we saw profit taking, very technical market. So the next measure move would be the 50% highs to lows here, and that has not come into play. Okay, so if that does not come into play, then the market is likely going to continue its move into 158, 40, 50 area here. Okay, and so where this market could stop, well, we have to look at the extensions that we have here. So I'm going to remove these two levels. You know now the levels. You know it's moving in a traditional measure move shorts here. The next extension long, its previous high is at 157.50. Okay, so that's a long way, but it's not impossible. If, on the other hand, this market is due for a continuation higher, and we will see, we will need the Australian dollar much weaker than the euro. If the dollar index continues strong continues, then there's another level here, 159.06, that I'm also watching. That has not traded yet. Okay, and the first target of the next measure move here might line up with that 50%. Okay, and in fact it does. So you know, we were looking at in this market is a potential test of the next measured move, a successful test of the next measured move, and then a continuation into 159.06. Okay, so that's what we're looking for. Euro pound. This market has broken already the sequence long here, and seems now decisively pointing to the first target that we knew since October last year, and has also traded extension here, not really cleanly, but notice how that busted the setup here. First target lines up with the first target of a larger measure move. So that's what we are likely going to see, and after that this market could start moving more quickly. So we'll see here how things are going to play. So one more thing to say about the euro pound is that if this move continues here and it retraces, should use the notable anchor lows to whatever new lows we get after the third bar. Okay, the euro Canadian dollar also very weak here, and there are two measure moves we're going to look at to which we would anticipate some sort of reaction. The first one, it's the inner measure move here that reached first, sorry, this is the outer measure move, and participation came at 145.23. First target hit, market went higher, did not hit that second target, but in any case we're going to use our aggressive trace from lows to highs, and this trace is in play now. Okay, so if this trace is actually pierces, so if it pierces this level, the 55.98 level, that would mean that this full trend has ended. Okay, and because this is a range, now we're going to look at a full retrace into the lows here, which is very good news for this market, because would give us you know, the potential for many trades, shorts here. Of course there'll be retraces, and a retrace could start from here. Actually, before that can happen, we need to see 155.98 being pierced on the downside. Okay, and next is the euro Japanese yen, and this market has been less technical than other here. You know, we so let's look at the larger time frame. the larger time frame, the bulls have not hold here, but when we look at this, a large multi-year range here, and when we look at the trace highs to lows, that has held. So in this large lateral move, the bulls are now the ball is now in the bull's court. So when we look at the larger time frame here, it seems that we would see a continuation lower into 123.60, 121.93. So that's the reason why it's always important to do every now and then to do full review of the larger time frames as well. Okay, so this market was also characterized by a busted setup that went into the first and second target, and then we had the next measure move that failed, and that's another confirmation of the fact that the ball is in the we should say the ball is in the bears field. The bulls, they have to defend. Right, so the larger time frames are showing a potential move into that 123.56, and when we look at the daily time frame here, lows to highs has not held, and highs to lows has not held as well. So this market is lateral also on smaller time frames, so be very careful. It's not as technical as we'd like it to be. Euro, New Zealand dollar, we're also seeing that these patterns everywhere. This market has been less technical here, and it's now correct, but it's now correcting anyway. And if you look at this market, you also see that same pattern of lateral move. So the same considerations here may apply that we saw on the Euro Canadian can apply to this market here. So we had a 50%, the next measure move, you remember, failed here. Dump money pushing this price higher, but the trend has ended, and so as this market has been barely holding the 50% here, that's the level where we're likely going to see this market. But these strong moves here show maybe the start of a new trend here in these markets. Look at how many weeks this market went nowhere. How many weeks we need to prepare these conditions for market moving quickly and with lower risk and giving us good gains here. Pound versus Australian dollar. There was an in 50% here, went into second target last week, and the market then naturally went to trade into the next measure move here, and as you can see, the next measure move has held. That's what has held this price higher. However, there's always the other face of the coin, and as you can see here, pound versus Australian dollar has been also holding shorts. Okay, we didn't see a sell-off. We saw the market going down and then retesting this level here. So we always need to be very, very careful here, and the pound is relatively stronger here. So Australian dollar might sell off more quickly and still push this price higher. Okay, so until 81.92 here holds, then this market is going to continue higher. If that fails, however, then the full sequence here might be maybe at risk, in which case we could see a further deeper retreat. So we will evaluate then if and then that happens. Okay. Pound, New Zealand dollar, very similar story here. This market is also reversing. It has traded a 50% here, 50% short. It has held and it has actually pushed this price lower. So where this price can go, we need to look at the larger time frames here. And remember that we used extensions to model these moves here. Okay, so the market was not capable of moving above highs here, so that a retest of that level could be possible. Also, this market has not been technical here, and in fact, the busted move here caused a quick move lower, which is the behavior that we usually would anticipate. So 87, 19, it's where this market is moving to. Any opportunities on the smaller time frame to get continuation of this 50% or whatever you get as an opportunity should be a good opportunity to trade this market on the downside. Okay. Pound versus Canadian dollar. This market has traded a 50% monthly short here, and that's the reason why it's moving lower. On top of that, there is also excuse me, weekly strength of the Canadian dollar here, and we're seeing this market continuing lower. The when we look at the weekly time frame, the lows to highs have never traded here, and this market in fact has traded in extensions, highs to highs. First and second target hit. The actual test of the new weekly shorts and the new start of the trend down is gonna come if price pierces to 178.25. That happens. Of course, if that does not happen, this market could actually bounce here and could bounce and maybe even retest the previous highs. So there are two scenarios here that I see. If the Canadian dollar strength continues, we pierce 178.25 and we start a sequence of measured move lower. If that doesn't happen immediately, it's possible for this market to actually bounce once again here and then come back. Okay, so if that happens, if we see weakness at some point here, that's the way to short this market. Okay, the 50% here was very cleanly tested, so there is, and this is a big range, so there's no reason to believe that this market cannot continue lower. It might require a little bit more time here, lateral correction, but because Damponi keeps buying, but eventually we could see this market moving lower. Pound versus Japanese yen. So this market has traded a 50% long here. It's in a reaction higher since a few months. On the monthly, we saw lows to highs, trading into the first target. So let's see it on the weekly time frame here. So we look at the larger time frame first, and then we look at what's going on the smaller time frames, because that gives us the full picture. So you remember that we have lows to highs into that first target. The next measure move also came into play. So everything is pointing up in this market. Okay, so the weekly is supporting higher prices. Now the daily has traded a 50% in here and went into that first target, and the next measure move has also traded. Okay, so very technical market, both on the weekly and the daily here. It held barely, but it held. And so the next measure move has a targets up 151.43. The opposing 50% is also something that we have to monitor at all times. to see whether the shorts might come into play here. 150.82 is not traded yet, okay, and will trade before the market gets into that first target, and 51.43. All right. So next is the New Zealand Canadian dollar. This market is in a big range on the larger time frames, as we can see here on the monthly. Yes. Okay. And as you can see, it's a big range, it's a big mess really on the monthly. That doesn't mean that there aren't opportunities on the smaller time frame. And we're seeing here the same patterns, of course, with some of this market already actually okay, so I'm going to use the same anchor, just applying rules here. I'm not doing anything special. And again, if 92.19 breaks, you're going to see the bottom of the range, so sequence of measure moving lower. So as promised in the past few weeks, yes, we had very tough conditions of trading recently, but things are clearing up, and the dollar index is reversing. These markets are exiting their sideways action, and they are likely going to start their moves now, and those moves are going to be much quicker. What takes 3 months here, 4 weeks here, it might take 1 week move in the new condition. So in the daily, we see this 94.03 has traded, pushing price into 92.34, and that's where this market could go, unless again we get a bounce here, and then we'll see what happens, whether a continuation higher or a reversal and continuation lower. Let's continue some of the other markets here. Australian dollars, Swiss franc. This market has not tested formally the 50% lows here, and it's reacting higher. We need to see whether it's reacting into an area of resistance, or if this is going to continue. And there is an area of resistance that was known, was the 50% short here that came into play. So if this market does not stop before, that's the level where we would see 74.85 this market move into. I'm not completely sure this market can make it to that level, and there is also of course a 50%. This is a range though. 50% is trading now, and we will see whether that the level holds and this price continues lower. If it does not hold, then we could see a retest of that 74.57. Okay, so I'm gonna have it here, and remember that level. Australian dollar, Japanese yen, with the weakness of the Japanese yen and strength of the Australian dollar, I mean, it has retraced as well. And this market, on the other hand, it has actually tested the 50%, and is actually on top of that 50% at the moment. Okay, so that's what this market is reacting to. It's reacting to a level of to a 50%, a by 50% long, and the opposing measure move here comes at on the weekly time frames, comes at 84.86. That could be retested, never touched the first target, so we're going to trace the next measure move. And then of course there are the sequences on the daily, and we can use them to confirm here. As you can see, this market is currently trading resistance, and 82.34 would also be the confirmation of the larger weekly and monthly bull participation here. Australian dollar, New Zealand dollar, it's continuing lower here. you remember that this market, and that's actually this market, what you see here in this market is very important of what could happen in the markets, in some of the markets. That's exactly what it's preparing here. There was a sequence of measure move, it failed, and the sequence of measure move short started. Okay, so that's what we're gonna see in many of the markets going forward as the dollar index is reversing. This market has touched the first target. If it comes back, we know where we can capture this market. Okay, if there is profit taking, we know that the level technically on the weekly time frame is 107. 1.07 here, and that's the level that, so this measure move has ended, and this market can still move into that those lows, and this setup here would do just that. Okay, if this setup comes into play, this market has been technical, so do not assume that this will just continue lowering. Of course it could happen, but I never assume anything about the markets. Canadian Swiss franc has traded with strength here, well above that extension short lateral move. We do not anticipate 50% holding here, but we're going to trace that anyway. We could have some profit taking there, and the daily it's actually showing, it's not as technical as you would like it to be, but the last measure move here, from if you take the lows to recent highs, has been technical, and price just traded into that second target, 75.04, 75.08, 4 pips of these 4 pips of front run there, and so this next measure move is going to be 74.67. Okay, next is the Euro Swiss franc. We also saw continuation higher in this market. This market has traded extension longs here. So when we looked at the extensions here, you remember on the daily we traced from highs to highs, and then we updated that from highs to whatever new highs were printed here, and that 50% has come into play, bringing price into that first target. Okay, so we have two levels that we need to watch in this market. One is the high lows to highs, and that has 17.26, the low was 17.28, so that has traded, as you can see here, and so there is a possibility for this measure move to move price into that second target. That second target would be above recent highs. If the 117.05 here is pierced on the downside, then we're going to trace the next measure move in the sequence from highs to whatever new highs we get here. Okay, so these are this is the play. These are the two plays. Either we hold this, move price higher into second target of the larger time frame, or we come back to the next measure move of the daily time frame here. Okay, so next is the pound versus Swiss franc. This market has been even stronger, obviously, because the pound is stronger on the generally on all over the board, and we had this 50% weekly here that since has pushed price higher, and the market came back to trade an extension. Okay, and you know, an obvious extension would be a weekly level here. That's not what has traded, and we actually had to find a level because this was an inner measure move, okay, a jumping extension. So we can use two levels here, the one I just traced or the higher level here, and that's where participation in this market came. We could not identify this before the fact, but only after the fact here, but still this is driving what's going to happen next. And the first target of the larger measure move here, it's above 137.88. That's where we could see this market. Okay, New Zealand dollar, Swiss franc, similar behavior here with the Swiss franc weak on the board here, and we saw a strong move. This market has not been technical on the smaller time frame like other markets. On the largest time frame here, this market, you know, it's not as technical as other markets, and sometimes I use the extension long here, which so far has held price and would actually justify potential for higher prices here. Okay, so on the daily time frame also we can see that the market has broken the opposing measure move in this range, and we were not anticipating it to hold, but as you can see, I mean, it's not as technical as other markets. Okay, so it's a bit iffy here to deal with this market. Okay, and finally, New Zealand dollar, Japanese yen, we have seen strength in this market as well, due to the you know, weakness in the Japanese yen, and there was a 50% here, an attempt of trading at 50%. When we trace lows to highs, that's where we see that's where we see the participation. It was around 76.50 here, and on the daily time frame there was also an attempt of holding this 50% from lows to highs, and that has barely held there, but it has held and is bringing price into 77.54. Okay, so this is it for this review. I'll see you in the room. If you have any questions, just let me know, and have a great continuation of the week. Bye bye now.